Okay, think about this for a second. You're walking around your town, maybe going to the mall, and you notice, I don't know, a certain coffee shop is always packed.
Yeah, or maybe some new gadget everyone suddenly has.
Exactly. And most of us, we just see that and, well, we don't think much of it.
Right, just everyday life.
But what if those little observations, those things you notice, were actually clues, like little signals pointing towards a smart investment?
Interesting way to put it.
Well, today we're doing a deep dive into someone who basically built a legendary career on that idea, Peter Lynch, and his surprisingly down-to-earth way of finding winning stocks just by looking around.
That's right. We're digging into his book, Beating the Street. It came out back in 1993.
And it's not some super dense academic thing, is it?
Not at all. It really builds on his earlier book, One Up on Wall Street, which he wrote with John Rothschild. It's all about offering a really practical, grounded view on stock market investing.
So our goal here today for you listening is to really pull out the best bits from Beating the Street. We're looking at Lynch's own stories, his way of thinking.
Yeah, how he saw investment potential in just, well, normal life.
Our mission really is to give you some practical tools, some straightforward strategies to spot potential investments.
Yeah.
Just by, paying a bit more attention to the world you already live in. No complex jargon needed.
And Lynch's whole philosophy, it kind of boils down to one really powerful idea. Invest in what you know.
Invest in what you know. Simple but profound.
Yeah, he really championed this idea that your own experiences as a shopper, as someone just living your life, can actually give you a leg up, an advantage in spotting good companies.
Okay, let's dig into that. Why is that so powerful? What's the advantage?
Well, Lynch argued that the amateur investor, and he meant that respectfully, is often right there on the ground floor.
Seeing things happen in real time.
Exactly. You might spot a trend taking off in your town or see how popular a news store is way before some analyst in a skyscraper even hears about it.
So your own eyes and ears become like an early warning system.
Sort of, yeah. Your firsthand experience can be incredibly valuable. It's not just about anecdotes, it's about real-world data points.
But it wasn't just about chasing fads, right? He wasn't saying buy the stock because the store is busy today.
Oh, definitely not. That's crucial. He was all about the long term. Looking at the actual strength of the company, its fundamentals, its potential to grow over years, not trying to guess what the market will do next week.
So understand the business behind the stock.
Precisely. If you understand the business and you believe it's solid, Lynch felt you could weather those market ups and downs that inevitably happen.
Now, this wasn't just theory for him. Peter Lynch had a pretty staggering track record. Can you give us a bit of context on who he was, where he came from?
Absolutely. So Peter Lynch famously managed the Fidelity Magellan Fund. He did that for 13 years, 1977 to 1990.
Magellan. That's legendary.
It really is. When he started, it was a pretty small fund, relatively speaking. But by the time he stepped down, it had ballooned to over $14 billion in assets. The returns were just phenomenal.
Wow. $14 billion?
Yeah, but what's maybe just as interesting is that even with all that success, managing huge sums of money, he kept this very relatable kind of common sense style. He wasn't your typical slick Wall Street guy.
And didn't he leave at the peak?
He did. He stepped down in May 1990, wanting to spend more time with his family, which, again, sort of speaks to his priorities, his grounded nature.
It's quite inspiring, really. Billions under management, but an approach that feels almost accessible. And Beating the Street wasn't his first book, as you said.
Nope. He'd already collaborated with John Rothschild on One Up on Wall Street, which really laid out that core philosophy first. Beating the Street kind of builds on that with more examples and insights from his Magellan years.
So who was he writing Beating the Street for? Was it aimed at finance pros?
Quite the opposite, actually. That's the beauty of it. Lynch wrote for the average person, the individual investor, not necessarily someone with a finance degree.
He wanted to demystify it all.
Exactly. He used plain language, tons of relatable stories. The whole point was to show that stock picking wasn't some dark art only wizards could do. He wanted to empower regular people to feel like they could understand it and participate successfully.
And that really hits home, I think, because it shifts the focus from needing, secret algorithms to just using your own brain and your own experiences.
Precisely. See a local restaurant chain doing incredibly well. Notice everyone carrying the same brand of handbag. Lynch is saying, hey, don't just ignore that. That observation could be the starting point for an investment idea.
Can you give us a concrete example he uses in the book, something that really illustrates this?
Yeah, one of the classics is his Dunkin' Donuts story.
Ah, the coffee and donuts.
Right. He talks about how he just kept noticing how consistently busy the Dunkin' Donuts shops were near him. He liked the coffee, sure, but it was more than that.
He saw the business potential.
Exactly. He saw the strong customer demand, the brand loyalty, and that everyday observation, seeing those cues, was what made him think, maybe I should look into this company as an investment. It wasn't a complex analysis at first, just noticing something obvious in his daily life.
But, and this is important, it didn't stop there, did it? He didn't just buy the stock because he liked the donuts or saw the crowds.
No, absolutely not. That was just the spark. The crucial next step, Lynch always stressed, was to actually understand the company.
Do your homework.
Right. What does this business really do? How does it make money? What are its competitive advantages, its risks? He even talked about doing simple stuff, like visiting stores, trying the products if you can, maybe skimming the annual report.
So getting a feel for the actual business, not just the stock ticker symbol.
Yes. Forming your own basic understanding and opinion. It's about looking beyond the surface observation.
And that feels achievable for most people, right? It's not like you need an MBA to visit a store or read a company's About Us page.
Not at all. It's about applying common sense and a bit of curiosity.
Now, you mentioned his earlier work laid the foundation. And a key part of his framework, even if not detailed in our source excerpts today, was his concept of the 6 types of stocks. Can you just briefly explain why that was relevant to putting his ideas into practice?
Sure. So Lynch basically categorized companies into 6 buckets, things like slow growers, stalwarts, fast growers, cyclicals, turnarounds, and asset plays. We don't need to get into the weeds on each one now.
Right.
But the point of this framework was to help investors understand that not all stocks are the same. They have different characteristics, different growth potentials, different risks.
So it helped manage expectations.
Yeah, and it helped you match a potential investment to your own goals and how much risk you were comfortable with. It provided a useful structure for thinking about what kind of company you were actually looking at once you'd spotted it.
Okay, got it. And going back to his broader philosophy, he was definitely not a fan of jumping in and out of stocks constantly. He preached patience.
Oh, absolutely. Lynch was a huge advocate for long-term investing. Find good companies, understand them, and then ideally hold on to them.
Ride out the bumps.
Exactly. He really discouraged trying to time the market, guessing the highs and lows. He thought that was mostly a fool's errand. Focus on the company's progress over the long haul, not the daily or weekly stock price wiggles. Ignore the noise, basically.
And beating the street isn't just dry theory, it's packed with his personal stories, right? What are some of those behind-the-scenes moments that give you a real sense of how he thought?
Well, one thing that really comes through is how he genuinely learned from everyday life, even from his kids.
Like how?
He tells anecdotes about his daughters pointing out toys or snacks or stores they like, things that were popular with their friends. And instead of dismissing it, he'd think, maybe I should check out the company that makes that.
So investment ideas from the playground.
Pretty much. It's a fantastic, very real illustration of his invest in what you know idea. The clues really can be anywhere.
That definitely makes investing feel less intimidating, more human. I heard he was also quite open about his own mistakes.
Yes, very much so. And that's so important. He didn't pretend to have a perfect record. He talked openly about investments that didn't work out.
Which is refreshing.
Totally. His point was that everyone makes mistakes, even the pros. The key is to learn from them, figure out what went wrong, and not let one bad pick completely discourage you.
Did he have any, catchy rules or principles he lived by?
Oh, yeah. He had his Peter's principles, things like the famous know what you own. Simple but crucial.
Know what you own? Makes sense.
And my personal favorite, never invest in any idea you can't illustrate with a crayon.
I love that. What does that even mean?
It means if you can't explain the business, what it does, and why you think it's a good investment in simple, basic terms, like you could draw it for a kid, then you probably don't understand it well enough to invest your money in it.
Keep it simple. Understand the basics.
Exactly. Avoid complexity for complexity's sake.
And he also had thoughts on how regular folks, the amateur investors, Might even have an edge over the professionals sometimes.
Yeah, he definitely believed that. His thinking was that Wall Street analysts, they're often buried in spreadsheets, maybe a bit disconnected from Main Street.
Right.
Whereas you, as a consumer, as someone living in a community, you're seeing things develop firsthand. You might notice a shift in consumer taste or the quality of service at a chain or the buzz around a local company before it shows up in the official numbers. That's a potential information advantage.
That's empowering. So for someone listening right now, maybe feeling intrigued by this whole approach, what's a tangible first step? How could they start putting this into practice like today?
I think the easiest, most immediate thing is just to consciously start noticing more. Pay attention on your commute, when you're shopping, when you're talking to friends.
Okay. Noticing what specifically?
What products are people using? What stores are busy? What services are people raving about or complaining about? What local businesses seem to be really taking off? Just start making mental notes.
And then,
Then ask the simple question Lynch would ask. Do I actually understand this business? Could this be something worth looking into more? It's about shifting your mindset slightly, seeing your everyday world through an investor's lens.
okay, that feels very doable. And if listeners want to go deeper, maybe read the books or learn more, what should we point them towards in the show notes?
Well, number one is obviously read Beating the Street and probably One Up on Wall Street, too. They really are the source material and full of great stuff.
The books themselves, got it.
Yeah. And beyond the books, you can often find interviews or articles with Peter Lynch online. Those are great for hearing his perspective directly.
Okay.
And for anyone maybe newer to this, maybe look for some good, accessible online resources that explain basic stuff like how to read a company's financial summary or what fundamentals really means. Keep it simple to start.
Good resources. And maybe a little challenge.
Yeah, how about this? Pick one company you encounter regularly, maybe a store you shop at, a brand you use, even a local publicly traded company if there is one, and just do 15 minutes of basic online research about its stock and what the business does. Just dip your toe in.
I like that. A small, actionable challenge. Okay, so let's wrap this up. If we had to boil down our deep dive into Peter Lynch and Beating the Street, what are the absolute core takeaways?
I'd say it's this. You, the individual, have the potential to be a successful investor
Ciao.
by investing in what you understand,
Okay.
by using your everyday observations as starting points,
Right.
by doing some basic homework to understand the actual business,
Crucial.
and by focusing on the long term, not the short term market frenzy.
Invest in what you know, observe research, be patient. Sounds about right.
That's the essence of it.
All right, and that leads us perfectly into our final thought for you, our listener. Peter Lynch found incredible success looking at the ordinary. So ask yourself, could your next great investment idea be hiding in plain sight? Is it that product you use every single day, that local shop that's always booming, that service everyone seems to be switching to? What have you noticed lately that might just be worth a closer look through an investor's eyes?